viewers want to know what's on your docket, what you're looking at this week. And so your pick of the week for this week is a brand that we are all very familiar with, and that is Nike, ticker symbol NKE. What do you like in this week?
So I just recalibrated my chart. I'm using the same free indicators that I've got out for you guys. I switched over from my broad market indicators to my fast app MACD. And I'm digging Nike. Now, Nike's a little bit higher in price than I usually go for, right? But, Nike is looking as though it's going to, earnings is in the rear view mirror. So I'm not worried about any sort of, surprises with any sort of earnings announcements. I'm looking for a reversal sip here at about $78. So I'm waiting for my light blue indicator to come up end of day to tell me that I've got a bottom. I don't want to get into this trade until I've found a bottom, right? But what I'm thinking about Nike, and I've got three options here, is either buying some stock when I get that bottom reversal signal, or I could use a substitute option. And I was using my option lookup tool. This is a tool that we just released. And finding substitute options that are trading at parity is just so easy with this tool. So check this out. I'm going to go ahead and type in the ticker symbol. Real simple interface. Just going to use my most recent amount of data. I'm going to look at all the different strike prices. And here's the key. I want to look at price components. And this is something that no other option lookup tool, especially historical option lookup tool, has, right? When we do our price components, we can go out to whatever expiration date we're thinking about. I was thinking about going all the way out to June or maybe using the April. And with the price components, you can see exactly how much extrinsic versus intrinsic value is in that particular option. So I kind of focused in on this $55 call, this $55 call that isn't going to expire until June 20th of next year. It's got, just under 5% of extrinsic value. So for the most part, well, while Nike is trading up here at $79, I could have an option that moves dollar for dollar. So if Nike moves from 79 to 80 and change, this option will go from $25 to $26, right? It'll move in lockstep with the stock. So we can get a little bit of leverage and we can also get a much cheaper price. So instead of buying Nike, I could be buying contracts of this Nike June of 2025 expiration $55 call. Or there's even a third option I was thinking about, and that would be selling cash secured puts, right? So I could come to the November monthly expiration. And if, I could basically pick the price that I'm willing to pay. So say, for instance, I'm willing to pay $78. I have to make sure I have $78 to buy a share if I'm going to do this transaction. So I have to have cash in my account. That's why they're called cash secured puts. And don't forget, options are traded in lots of 100. So I have to make sure I have $78 times 100 because I'm going to be buying 100 shares. So in this case, I need $7,800 in cash waiting in my account. But that's a great price looking at where Nike is right now. If I look at where Nike is right now, Nike's trading at 78.88. So if I could get it for $78 and I had, again, I'm going to do this only after I detect a reversal. That's a great price. I get an 88-cent discount on the stock. That's almost a 1% discount on buying the stock. That's not nothing. But the other thing is when I sell this cash secured put, they're going to give me $1.61 per share just for selling that cash secured put. So in addition to getting that 88-cent discount, if somebody does sell me that option for that stock for $78 a share, I've already offset that price by $1.61. And if somebody decides before November 15th not to sell me Nike at $78 a share, I still get to keep the $1.61. So it's a great way to get into an initial covering position. So I could buy the stock outright. I could buy that substitute call option that doesn't expire until June of next year at a discount, or I could do some of these cash secured puts to lower my break even price as well. Any of those would work, but that's what I would do if I was, going to be trading Nike. And then I just watch it and look for when I wanted to do my premium trade on it. But it's always getting into the trade first, right?